That leads us on to the investment side. I'm going to talk very briefly about coal today. I usually talk a lot about coal. But just to give you remind us all of the history of where we've come from, the coal price over the last 10 years rose and rose, and it rose a great deal, and that gave great impetus to the resources investment, what we're calling a super cycle, because it was so big and went on so long. But what we now have is we've had falling coal prices. That's the trigger, part of the trigger for the very sharp pullback on the lever of investment rolling through. And that's likely to continue. So that investment is still rolling through, and Simon's recently done some modelling with Hunter Development Corporation and Monash University about the impact on GDP in the area. So this is the investment coming through, but there's an ongoing legacy in terms of GDP. This is the upper Hunter, where it has a very strong impact, but the picture is similar to the lower Hunter, not as large an impact because it's a much bigger and more diverse economy. But we will still get benefit from that super cycle for another 20 years. Don't know what happens beyond that, wait and see. That's the impact on GDP. The impact on employment falls out much quicker. But that's the investment part of the cycle. Then rolling into the production cycle, and that's the other thing, is that the production will continue and will continue to feed into the local economy. This is exports, expressed as exports through the port, and this is expected to continue growing. So that's still sitting there providing a base to the local economy. However, in terms of other business investment expectations, small and medium businesses are still pretty subdued. This is our read on capital expenditure intentions from the survey, and you can see that it's still at a relatively low level, and that's not least because capacity levels are still relatively low. There's still excess capacity in the regional market. Similarly, in terms of non-residential approvals, one of the indications of private and public investment, that's still fairly subdued. We've had, the stimulus on the public side in the GFC has all trickled through, not a lot happening there. And the early indications for the next quarter, the August quarter, is a little lower still. So that's pretty subdued. It's still rolling through. But in the sort of historical context, this is private investment only. You can see that in recent times and going forward, this is a lead indicator, we're still trucking at real levels that are lower than they were in the run-up to the GFC. Reason for our cautiousness. Similarly, with small cap investment, if we have a proxy with new commercial vehicle registrations, this is the effect of the government stimulus on commercial vehicles. This is, throughout this period, been a pretty modest level. There hasn't been substantial growth in that way. However, it too may be levelling off. It's not falling rapidly. And on the public side, I'm not going to take you through the detail of that. It comes from the Hunter Infrastructure Alliance and the infrastructure strategy that's been put forward. There's potentially a great deal of public investment that can still roll into this region, and the state government has indicated that this area is a priority. That plan is sitting with government at the moment awaiting approval. So there's some uncertainty there too about how fast and to what extent that will roll through. So some question marks over investment. Indeed, again, going back to June, we saw record lows in terms of forward orders and expected forward orders. That has picked up. Even more so, trading performance has picked up. And this is the business confidence in how their own businesses will perform. again into record lows, but has picked up strongly in September. And that's in line with national reads on business confidence. These readings were taken just before the federal election, when it was pretty clear that the coalition were going to win and bring in a raft of pro-business policies. We will need to give it time to see how those expectations and how that confidence rolls through into investment. It usually is a good indication, but again, we need to wait and see how rapidly government policies translate into action and the degree to which they can actually translate what they want to do into action.